I always say that my kids who are 7 and 4 know how to spell the word remittance. And they often hear that at home they know that when they hear that word, they need to be really quiet because mom is frustrated. It is a complicated topic. We're hoping that we get technology to actually fix these issues that many of you from the diaspora or doing business on the continent are facing. So to lead this panel, welcome Akego Okoye, who's the Vice President of External Affairs for Access, a leading health technology innovation company helping improve care for more than 3 million patients worldwide. Thank you, Akego.
Thank you for joining us today as we discuss the cross-border movement of money and remittances. So according to a World Bank report, in 2022, the African diaspora alone sent over $53 billion to the continent. According to the report, remittances in Africa grew by 52%. And this is in spite of the region being the most vulnerable to the headwinds from the pandemic and the global economic slowdown. The importance of remittances to economic growth on the continent cannot be overstated. Our ability to conduct smooth payments and money transfers is very important for the AFCFTA. And beyond sending money to friends and family, we also need to consider B2B transactions to promote trade. Our panel today consists of companies covering different aspects of the ecosystem, and we will explore some of the challenges they face, innovative ways they have worked through some of these issues, and what we expect in the future as we build a more robust ecosystem. So in a bid to save time, all I'm going to do is introduce each of our panelists, and then we'll dive straight into the discussions. Joining me today is Benjamin Fernandez. He's the co-founder and CEO of NALA. I think our keynote speaker referenced you earlier on today. Congratulations. Nael Halimariam, co-founder and CEO of CHAPA. Stephen Marshall, Chief Partnership Officer with Crown Agent Bank. And Albert Awusu Asare, co-founder and CEO of Kadana. Thank you so much. Thank you. So Nael, I'll just start off with you real quick. So CHAPA has made history by rallying the Ethiopian diaspora to contribute millions of dollars for the Grand Renaissance Dam, and also some relief efforts for disasters. So how successful has this been? And if you can just talk to us about your experience with this process.
Okay, thank you guys. This is Nael. I'm the co-founder of CHAPA. So a little bit about myself. So I went to work at WeChat, Tencent, prior to co-found CHAPA. So CHAPA is basically the Stripe of East Africa. So mainly now we are focusing in Ethiopia. So officially the Ethiopian government, they started to give licenses for non-bank players to participate in fintech since 2021. So in 2021, after seeing the value of the diaspora community, which are actually scattered around the world, Ethiopians are more than 3-4 million people. So we started to actually start the crowdfunding platform for the Great Ethiopian Renaissance Dam, which is the largest dam in Africa. And also there is a platform called iZone. So we raised $8 million in a few days, and that's basically to show to the government the value of fintech, also the value of the diaspora community to the Ethiopian development. So that's actually one thing. And since then, CHAPA has so far now processed $2-3 million every week. And we are now basically really trying to also scale and tap into other East African markets like Djibouti and also Kenya. So basically the remittance in Ethiopia in 2022, it was around 5 billion USD. So there is a big growth actually on that. So maybe we can discuss more on that later. Thank you.
Thank you. Stephen, I'll just come to you real quick. Fintech clearly is at the forefront of improving cross-border payments using mobile wallets and digital platforms. So your company, Crown Agent Bank, you're active in like over 40 African countries. And what challenges have you seen in doing business across the continent? And if you can also speak to this idea of using cross-border payments for B2B transactions, that would be good too.
Sure, thank you. You're correct, we operate across the vast majority of African markets. The challenges typically are technology. We find that the fintech sector has been transformative across the continent. And the space for remittances to play in, particularly around mobile remittances, is extremely strong. But the same is not yet true of the banking sector. So bank transfers are more challenging, certainly to do them at scale. The other piece, of course, is access to liquidity, which is a big challenge across the whole continent. But it's not a unique problem to Africa. So a dollar shortage creates a difficult FX environment to navigate. And then I think the third piece is probably regulation. So again, not a unique problem in Africa, but regulators the world over I think are having to work very fast and very hard to keep up with the innovation in the fintech space. And that rarely does that come with the same scale of growth within the regulatory and supervisory teams. So they're having to do more with the same resource. So it creates a difficult environment, but clearly one that's very rewarding if we're able to navigate.
So has your platform been used for large ticket money movement across the continent or to the continent?
It's a mixture. I mean, we work with essentially the development sector, and we work with financial institutions. So the financial institutions are central banks, commercial banks, and fintechs, and they all have a slightly different kind of dynamic in terms of what they're looking to do across the continent. You know, if you think about the development sector, they are regularly doing a small number of large ticket transactions, so it's easier to manage through the banking system. We did acquire a fintech in 2019 that had specifically built a platform to do cross-border mobile remittances, which is a very different side of our business. Much more tech-led, but clearly an entirely different volume. So we play on both sides, but it's the challenges faced are very different, and I'd say actually today the retail remittance space is probably easier than B2B, certainly from our perspective.
Interesting. Benjamin, I'll come to you now for you to tell us a bit about NALA. You launched the US-Africa remittance last year, and I think Europe the year before. We were chatting, and you said your Europe transactions are that business is much older than the US one. What's your unique offering to the diaspora community, and how have you found adapting in the different markets on the continent?
Cool. What's up, everybody? Mambo Vipi to my fellow East Africans. Salamno to my Ethiopians. My name is Benjamin. I'm from Tanzania. I just got off of a flight like an hour ago, so I'm still waking up. But the way I look at payments is, so for context, we do cross-border payments from the UK, the US, 19 European countries to 5 African countries, which include Tanzania, Kenya, Uganda, Rwanda, and Ghana. What we've learned over the past year is, just even for the consumer side, we've seen 27% of our customer base daily active. Now, if you look at data, people assume, okay, remittances, people send money maybe once every 4 to 6 weeks. But with the proponent of mobile money transfers, people being able to spend smaller amounts, we see the behavior of sending smaller amounts but more frequently versus one large bank transfer at the end of the month, especially to corridors like in East Africa where it's very mobile money heavy compared to other regions across the continent. So what we've done as NALA is really look at, okay, what's next, right? So what's the behavior that people are going to adapt? So for example, in Kenya, we enable people to do direct pay bills on M-Pesa, which enable people to pay for bills directly, whether it's a hospital bill or a school fees bill, instantly without having to pay a cousin or an uncle and hope that they actually pay the bill for you, but maybe they use it for something else. But yeah, that's what the behavior that people have been asking us for to do. Now on the business side, we've seen for us when we asked the 26% who are using Nala like on a daily basis, why are you using Nala every day? Like a lot of them said, oh, I'm using it for business. I was like, well, what do you mean? It's like, okay, I do this import business or I do whatever business, like mostly smaller businesses. And because the FX rates you're able to provide are really good, we try to do a lot of our transactions through you. So we launched Nala for Business based on the user behaviors that we were seeing on the consumer product. And we provide two main services for businesses. So this is large transactions, up to $250,000 a day per customer. And they can send it to all the countries that we operate in. Primarily for business, we service UK and European businesses that operate within Africa. The things that we've been learning is, I think Steve touched on it briefly. Africa's got the largest global dollar shortage in the world, which is difficult because like what you start to see is a huge arbitrage that some companies play with and start to charge people premiums and some companies make a lot of money on those premiums, and at the end of the day it's the FX trade corridors for African businesses that will suffer. Right, it's the import-export businesses that are losing 6 to 8% on FX markups that suffer as well. And I think that's where technology can come in, obviously with licensing and government approvals. For example, with Nala, we just got our payment system license in Tanzania that enables us to do cross-border, including for large businesses and trade inbound and outbound. And so things like that will enable other businesses to increase trade. And I think it's right at the beginning stage of it. So I think I always tell our team, I think payments across Africa is 1% built. I think there's so many more companies that are going to be built. I think even in this room, there's a lot of talent that people are going to be building incredible companies across the African continent, specifically in payments. I think there's a lot more work to be done. Like we as Nala won't be able to accomplish it all by ourselves.
That's excellent. Thank you so much. Albert, I'll come to you now. We've talked a lot about the infrastructure and some of the issues that we face with cross-border payments. Perhaps we can turn our attention a little to the user side, because your fintech is a little different. You handle payroll, and so you're helping businesses here, like in the US, pay staff on the continent. So can you talk to us a bit about your experiences rolling out this type of fintech on the continent? Which markets are you in, and what kinds of companies are you serving in the US?
Sure. So my name is Albert. I'm the CEO of Kadana. And our mission is to make it very simple for businesses in the US, UK, Europe, anywhere in the world, to basically pay talent in Africa, right? I think we've seen, especially after the pandemic, that talent is evenly distributed, right? But opportunities are not. And so where we come in is, we want to, our stake is that if talent in Nigeria, right, has been able to find a job, paying them shouldn't be the hardest part of that flow. So effectively, what my business does is we connect to different payment service providers all over the continent. So anywhere from like Liberia to Kenya, South Africa, all the way to Egypt and in between. And then we effectively help businesses pay them seamlessly. So where remittances come in is basically, they're paying some of these folks in dollars, in pounds, in euros, and then we basically have to give the talent a very good experience in how they convert that money back and how they actually utilize that money.
So what has been experienced with the users on the are they paid in dollars or are they paid in local currency?
Yeah, so increasingly we're seeing people getting paid in dollars. And I think the challenges are really, how do they get their money, right? So money usually goes through SWIFT or some kind of long transaction processing fees. And so what we have done, which I think is pretty innovative, is that we have this thing called the Kadana wallet. And it's basically, a holder value. It can actually hold the dollars, and businesses in the US send us money. So the money doesn't actually move through the SWIFT rails, right? We're able to, you get a notification, you've gotten paid, and then immediately we're able to help you kind of convert faster, cheaper. So the challenge really is just how fast they can get paid, and then how do they actually convert from dollars to the currencies that they actually have utility in.
Right. Thank you for that. I think just coming back, Stephen, just coming back to you, Benjamin talked about Forex issues, and I feel like that's the big elephant in the room where remittances are concerned. So can you, is there a way, if at all, for us to solve these Forex issues? What are your thoughts on
That's a big question. I mean, it is the elephant in the room. I mean, the fact is, and it's not, again, it's not unique to Africa, but Africa, as you pointed out, is absolutely has the largest shortage of hard currency liquidity, and that drives two markets. So you often see the official rate, and then you'll have an unofficial, informal rate. And the biggest market for remittances is Nigeria, and Nigeria has a wide range of different FX rates that people can achieve. And clearly, as long as you don't have that free-floating currency, and you have a desperate need for corporates that have generated local currency profits that they want to repatriate to their home country, as long as there isn't enough dollars for them to buy in order to facilitate that transaction, you're going to end up with this sort of duality of the formal and informal. And it's the right question to ask about, how do we solve it? And people much brighter than me have tried. So I think that the answer is out there, but what it's going to take is, I think governments across the continent to come together and to understand what's the negative impact or the unintended negative consequences of allowing kind of informal rates to exist, and what are the steps that they have to take in order to create that more sort of floating currency. It's a dangerous space to play in, though, because clearly, if you're a central bank governor, I feel their pain. They've got to try and manage that environment when local currencies typically devalue against the dollar. We see that happen all the faster now with rising interest rates in the US, driving down the value of currencies around the world. So it's a really, really hard space to play in. Technology is a great addition to the cross-border remittance world, but technology is not going to solve the dollar crisis, and that's going to take a political movement.
So just practically, guys, you guys are doing this on a daily. So what's your workaround? Does anybody want to speak to what's your workaround today with the dollar shortage issue on the continent? Benjamin?
I think, look, it depends, right? So, for example, we operate in multiple countries across Africa, so every country has its own, nuances, and then, you work with different banks, and different banks give you different rates, and then you're trying to negotiate the best rates because you want to get customers the best FX rates, and then you have all these crypto companies coming up to you and be like, yo, use crypto, blah, blah, blah. I'm like, look, you don't even have liquidity to give me in these markets. And yeah, I'm a believer in crypto, but people oh yeah, use crypto in these countries, whatever. But then at the same time, that same company is coming to us asking us for offline liquidity in the same country. I'm like, okay, so there's no point using you guys right now, and we make more money still without a crypto rail versus doing fiat directly. So the things that we do, so I think we're fortunate because we collect money in dollars, pounds, and euros. So we have the most negotiating power with banks locally in the market. Now the challenge becomes, let's say in Tanzania you have 61 banks, right? So you're like, okay, cool, who's going to give me at what rate? What's the dollar to shilling rate or pound to shilling rate or euro to shilling rate? And then because you bring in the hard currency, you have negotiating power, so banks will start fighting for your dollars. Then it creates this awkward situation because the bank's like, oh, well, you bought from us last time. Why are you buying from this bank this time? Okay, fine, then you can't do payouts with us to our customers. And so those are some of the challenges we face. And I think if you do hold dollars and bring it to the region, you do have significant leverage. I think the second option is working with traders, so global traders. So, for example, fun fact for everybody in the room, 52% of the tea that's drunk in the UK, according to the Department of Trade, is from Kenya. So Yorkshire tea, whatever tea, it says English tea, whatever, that's actually Kenyan tea. It's just processed and remanufactured in the UK, but it's actually Kenyan. And so you can imagine the large wires of money that are sent in dollars or pounds from the UK to Kenya. And a Kenyan farmer receives the money and has got to convert it into Kenyan shillings in order to pay the other farmers. Now, the Kenyan farmers come and tell us, they're like, oh, what's some of the challenges you face? Oh, sometimes we can't even get all the liquidity that we want. So like, let's say you got paid $4 million. The bank's like, okay, we'll give you 300K today, and then we'll give you 600K tomorrow. Then we'll give you $1 million in 2 weeks. And so even getting money back into Kenyan shillings to like pay out their farmers for the goods becomes an issue and a challenge. And I think, you know, if done properly, there's a big B2B opportunity with technology that enables global trade, but also reduces the cost significantly by working with traders, only if it's done legally. I know quite a lot of companies who get into the gray on this, but I think if it's done legally, it can really create a lot of impact across the continent.
Thank you for that. I guess we'll be remiss if we didn't discuss regulation and the regulatory environment. And you know, Ethiopia is a very unique market. And I wonder, Nael, if you can just speak to us a little bit about your experience with regulators in Ethiopia.
Sure. I think before that, let's think of like how remittance is related with GDP. Right? So in 2014, actually remittance encompassed around 3.2% of the total GDP in 2014. And in 2022, it actually encompasses around 0.4% of the total GDP. So the gap actually comes because of the gap between the official rate and the informal rate.
Right. So
now in Ethiopia, for example, $1 is like 15 Ethiopian birr in average, like 53, 50, let's say 50. But in the black, it's actually 100 birr. It's like 100% increase. So actually, we did some research on remittance, and we started like to ask the value proposition that we could actually have as a leverage between the sender and the receiver. And what they care about the most is one, the trust, and second is the amount, and third is the time. So for the trust, both the informal and the formal market are actually trustable. I mean, if you know the agent and everything. And the second one is the amount. So there is 100% increase from the formal rate. And the third is the time. So for the time, the official rate is actually almost instant. But the informal one, it takes maybe a day or two. So whenever the sender actually like sends money back home, so they start to think about these three value propositions, and then they choose based on that. So there are some resources actually that says the informal rate is 4 or 5 times higher than the official rate, like basically the rate, right? So it means like in 2022, the remitted money was around 4.3 billion USD in Ethiopia. So the informal rate, you can multiply that by 4 or by 5 to actually. So the total is actually around 25-30 billion USD every year. So just only by the formal rate, it's actually larger than the country's export earning, just only the formal rate. So you could think about, I mean, in the regulatory body, if they could be able to actually make it, the FX issue solvable, then I think there would be like many, many opportunities that we can actually have. And actually the world's average in 2022, based on 122 countries, based on the World Bank, is 5.8%, the total GDP. And in the low-income countries, it actually accounts nearly 4% of the total GDP. So it means the Ethiopian, it's like much, much larger than even the low-income countries. So it shows that we need to actually like do a lot in the regulatory body to actually at least make it near to the point.
So is it true that in Ethiopia you can receive money from abroad, but you can't actually send money out of Ethiopia?
Yeah, so the thing is, inbound remittance is okay, but outbound remittance is not possible. So that actually also like hinders for growth. I mean, right. So as Chapa, like our mission is basically connecting Ethiopia to the global economy, right? So we actually want to see a buyer in Ethiopia buy, a service to a business in Cameroon or in Australia or in the US. That's our vision. But the outbound remittance in Ethiopia is not possible because of the regulation.
So that will inhibit your ability to grow, right?
Exactly. So that's why, I mean, you don't really get to see high volume of formal remittance, right? And I think there could be like, I think there are like possibly there are serious solutions. One is so basically trying to peg the dollar with our currency, like the Djibouti actually they did the same thing in 1971. So if you go to Djibouti, yeah, the US dollar is actually pegged with their currency, with the Djiboutian franc, since 1971. So that's one way, and thank you. And the second one is actually, as phase one in East Africa, if you could be able to actually have one currency, that could also solve the problem. So like in phase two, we can actually have a continental one. And the third one is a stable coin in the crypto, but I mean, we could be able to see how it actually encompasses on that, but still, crypto is not legal in Ethiopia, so.
Thank you so much. Albert, just coming back to you with some of these issues that we've discussed, just to understand how it impacts in the payroll space. So in terms of regulation, the Forex issue that we've talked about, because I asked earlier if people are receiving money in Forex, and in Nigeria alone, I know that over the last couple of months, it's been disastrous, so to say the least. So just wondering what your own experience has been with some of these challenges as it relates to payroll.
Yeah, the way that our business works is that we want to give every business a hire button, right? They just click hire. They shouldn't think about the complexities of where they want to hire from, Ghana, Nigeria, Kenya, etc. So our value prop is actually directly tied to the surface area of countries that we can actually, pay people in. And so whereas we want to create that borderless experience for our users, the reality is borders actually do exist, right? There are jurisdictions, there are regulators in those jurisdictions. And so the challenge for us is really kind of the fragmented nature of all the different people we have to deal with. But at the same time, we understand that it's important, right, to basically treat those regulators as stakeholders that you want to engage, you want to learn from, you want to teach if it makes sense. So the challenges is just how each of these countries perceive inward remittances. In a lot of ways, our business is a little bit straightforward because we have dollars that are coming in. So like Benji said, even with FX, it gives you a little bit of bargaining power, if I may. But still, every country looks at those inward remittances very differently. And then, you layer on top of that the complexities of hiring, right? There are local labor laws in each of these countries. There are strict definitions of what are allowed and what are not. And so not just do we have the FX, regulatory payment situation, we actually have to make sure that we are not creating any unnecessary risks for our customers. So I think it's really also similar to what Stephen said, which is technology is moving so fast, right? We're gradually becoming a little bit more global as a world, but the regulations tend to move a little slower. And so just kind of being patient sometimes and then working with regulators to understand what the common goal is, I think has been proven to be good so far.
Thank you guys so much. Just to let the audience know, we are going to leave time for questions if you have some. So we're just going to try and wrap up real quick so that we can take any questions from the audience. So guys, just as a closing, just want some of your reflections in terms of how do you see cross-border payments and remittance evolving over the next, should we say 10 years? I think 5 years is a little short. So maybe over the next 10 years, how do you see the space evolving?
Cool. I think, as I said earlier, I think there's going to be a lot more companies built in the space, and I think that's really exciting. I think the customers are going to win at the end because it's going to make it cheaper for everybody, and I think that's what I'm hopeful for. I'm really excited about. I also think regulators. I'm actually very supportive of a lot of regulators on the continent. I think many founders who don't go and sit down with them and talk to them and understand what their true issues are, like, you know, I've been on so many panels in different places, and people are like, oh yeah, especially African, regulator sucks, this. I'm like, cool, but go and sit down with them, understand what the true problem is. Like, it's easy to say that from New York, saying like, oh, the regulator in Ghana or Tanzania or whatever sucks. Like, fly there and go and see them, right? And I think the founders that will start to do that more often will start to learn and understand what are the true issues that regulators are facing, and you help shape the policy for the future, and you help enable the next 50 or 100 companies coming behind you. And I think that should be the opportunity that we each on this panel and people in this room are very privileged to have, because we are meeting the regulators, right? And I think that's what's going to happen more. I'd also think like the investment across the continent is going to increase in cross-border payments. You know, the U.S. is getting more and more involved heavily, and like it's good to see that. You know, but you know, I think other regions around the world will also be involved as well. Like we've seen the rise of China across the continent, and it's massive. It's cool, it's the elephant in the room. We're Washington D.C., but it's facts. You know, like we even as NALA, we've had so much, like a lot of Chinese VCs reach out to us over last year, and like some of our US VCs are like, okay, well, if you take their money, we're not in. I'm like, wait, what do you mean? And that's facts. Like, you know, there's no point buttering things up, but that's the truth of what's going on in the ecosystem. And so, you know, I think global trade will increase. I think there's going to be more tech companies built, and I'm really excited for what that looks like. And I think we all have a responsibility to shape the policy instead of complaining about it.
Good point, thank you.
So, like, to add on that, I believe the financial inclusion in African countries would actually have a higher impact on receiving remittance payments, especially like on the last mile delivery, right? That's one thing that I actually believe. And the second one, I think, so having the same currency across some parts of the continent would actually have a bigger impact, because now that's actually one of the biggest issues for remittance. So having the same currency, especially like in the Pan-African region, would actually solve lots of problems. And also I believe remittance with cause and remittance with service would also like have a higher and higher rate increasing. So if you see it every year, that actually have a bigger increase on that. So yeah, I mean, and as to mention about the regulatory body in Ethiopia, they're actually like doing very well, and now the market is up, like will be open very soon for the global investors as well. So it's already open now for the wallet, that's why M-Pesa is coming to Ethiopia. So I mean, they officially opened it in 2021. So if you see like what they actually have achieved in 2 years. They have achieved a lot. So I think this will continue as well. And we are also like working hand to hand with the regulatory body. And that's the pillar for growth, compliance and partnerships. Thank you.
Great. Stephen?
Yeah, thanks. I agree with what's been said. I think technology is going to advance. I think there's a lot of development on the continent. I think it was touched upon in one of the earlier sessions as well. I think more VCs locally in Africa will invest in African companies, which I think is a really positive thing. But I think we're going to run headlong into a regulatory brick wall. And I absolutely recognise what Benji said about speaking to the regulators. I think regulators today are so much more keen to embrace and understand what's happening. I often make the point to central banks, especially in a week like this, that we'd much rather ask for permission than beg for forgiveness. And if we're going to operate in a country, we want to explain fully what we're doing so that they can understand and they can probe and they can ask questions. And I think more regulators now are really keen to do that across the fintech world. And now that it's got such a big critical mass. So I think actually the sooner we can get to that point where we hit that sort of regulatory brick wall, the better for the industry, because we'll have more people in the same room having the same discussion, looking to achieve an outcome, which today has kind of been ignored slightly because we have this formal and informal FX rates. So I think the sooner we get there, the better, and technology will drive the speed that gets us to that point.
Fantastic. Albert?
Yeah, I mean, from where I sit, I think it's incrementally obvious that the world is becoming a little bit more global. I said earlier, talent is everywhere, right? We believe that, Africa has some of the hardest working people, some of the most joyful people to work with, smart people. And so for us, we think that that remote work trend and sort of talent from Africa basically helping with the global labor shortage would continue to rise. We think that as far as sort of payments for those talent is concerned, maybe there are three components, right? We think that it needs to be a little bit faster, so real time, and we're gonna find smart ways to get money to people faster. I think it's gonna have to be flexible. So Benji touched on mobile money, right? And now, making payments to mobile money. Even for us, we're helping talent basically cash out into mobile money in certain countries, right? So it should basically be like, hey, I want to get paid. This is the method in which I want to get paid to, and it should happen. And I think the third is borderless, which is we're going to have to figure out a way for people to be able to move from Nigeria, work from Kenya, work from South Africa, and we have to figure out a way to get them paid, irrespective of which of those borders and jurisdictions they are. So those three components, I think, will see massive development and improvements. And
Thank you guys so much. My sincere apologies. The organizers say that we have to wrap up, and so unfortunately I will not be able to take any questions, but please feel free to catch any of the panelists during the break and ask them any questions you have. Thank you all so much for attending. Thank you.